In the cozy heart of North Carolina, as Christmas bells ring their tune, Triad families decorate and dream of a home they hope to buy soon. They are tired of paying rent, but have been too scared by the news. Less homes for sale and higher interest rates gave everyone the blues. But as we go into the new year, there's an opportunity for joy, as a new home is on Santa's wish list for every girl and boy. Rates are lower and homes are selling. The Triad is quite hot. The Sharp Mortgage Team will talk to you with great care and thought. Even if you are not ready today to take the next step in your life, we know that life can change quickly for a husband and wife. There is no obligation to talk to our local team about your dreams. No stress at this time of year. It's as easy as it seems. Celebrate Christmas knowing you are well on your way to build beautiful traditions and magic for future holidays. The Sharp Mortgage Team raises a toast to your family's festive cheer, whether you're ready now to buy or waiting till next year. A house truly becomes a home when filled with love and holiday songs. Christmas in your new home is where happy holiday hearts belong.
This is the Triad Podcast Network.
Hi, everyone. Thank you for joining us for another episode with our certified financial planner, Jennifer Johnson. She is with Three Magnolias Financial Advisors in Winston-Salem. 'Tis the season for holiday shopping and spending, and also for year-end reminders for all the things that you need to be thinking about before we flip the calendar to 2025. And Jennifer, as you can hear in my voice, it's also the time for battling crud in your system.
Yeah. Yeah.
Voice is struggling a little bit right now. I've been battling what probably a lot of people are battling this time of year because man, on the day of our recording, it has been super cold, and these climate swings have really taken a toll on me. But you seem to be in much better health than I am. But anyway,
So far, so good.
Yeah, that's good. That's good. So
fingers crossed. Yeah, but you're right. We're around new people around the holidays sometimes, and it's been very cold. So we thank you for your commitment to the podcast and toughing it out for us. To get this really critical information in people's hands.
It is. People are getting all sorts of emails, I would imagine, from different things in terms of, hey, here are some year-end reminders for you. And it could be work-related. It could be with investments. It could be with donations that they're making. It's really important to check certain things off your list before. And we're not talking about Christmas lists. We're talking about your financial list before the year ends. So, why is it always so critical when we get to the end of the year that people start to pay attention to certain things related to their finances?
A lot of it has to do with the tax year, right? So if there's anything related to the tax year, most of it will have to be done by the end of the calendar year, right? And certainly we'll encourage folks to consult their tax advisors as well. But there's a few action items that if you don't do by the year end, one, you may be missing an opportunity to save money on taxes. Or you may be losing money, like in the case of flexible savings accounts, where maybe you funded those for health expenses and so forth that haven't been used. So just some important things that with that deadline looming, we were just talking before we started recording, right? That with Thanksgiving coming late, you start to look at the calendar and you're like, wow, there's just not a lot of time left. So I guess the time is now for folks to act on a few of these things we'll talk about today.
Yeah. So what are some of these things? And I would imagine these are typical conversations that you're having with your clients in terms of, hey, here's what you need to be looking at. And look, taxes and things like that. Like it's the end of the tax year is the end of the calendar year. And so it's the opportunity to say, okay, make sure that whatever you're doing in terms of anything that you're writing off on your taxes, that you're getting it done by December 31st. But where do you typically start when you're having these conversations with somebody to say, all right, let's begin here in the conversation of typical year-end topics?
I would say maybe the most time sensitive would be retirement plan contributions that happen through payroll, like your 401k, for example, at your job. And I start there primarily because here it is December 4th. Depending upon your pay cycle, you probably don't have a lot more paychecks coming before the end of the year. So if we want to take action on that, you really want to do that as soon as possible because your limits on contributions to retirement plans like 401ks or 403bs, those are an annual thing. They start over with the next year. And if you want some benefits for 2024, you really kind of have to get ahead of that one in looking at pay cycles. So I would encourage folks take a look maybe at your last pay stub, or if it's an online program where you can access, which most of them are now, to look at your 401k, look at that and say, okay, have I put as much in there as I could, as I would have liked to? Limits continue to go up on those. So it may be something where if you had set up maybe in the previous year to max out your 401k, those limits go up from year to year. So it may be that you have some more room to make contributions and, haven't done that. Like, for example, if you're under 50, you could put $23,000 out of your paycheck into like your 401k or 403b. And if you set that up in years past based on a previous limit, you might have some more room. And so I would just encourage people to take a look at that in whatever way you have the ability that it's being tracked, either on a pay stub or online. And just if you want to get more in, those have to be done through payroll. So you want to get on that pretty quickly.
So what is the current limit for contributions?
Yeah, so if you're under 50, your limit is 23,000 is the most that you can put in out of. Now you don't have to include what your employer might put in that limit. That's just like kind of what you can put in. And then if you're 50 or over, I should say. So and so this might be a good reminder if you turn 50 this year, and you were really trying to get as much as you can in there, you're eligible for what we call a catch up contribution, and that allows you to do another $7,500 into your plan. So it's a lot, so the capacity there to save, for if you're under 50, 23,000, if you're 50 or older, 30,500. And then for 2025, those limits go up a little bit more even as well. So as you want to take a look at that annually, I think, and make sure you're getting the most out of those benefits.
So what you're saying is one thing that people can do right now is they can look and they can say, okay, I can go into my 401k contributions, my own contributions, not the company match. We're excluding that. But let's say you've contributed 22,000 for the year, and
Right.
that's where you're going to be at the end of the year. They
Yeah,
could try to put in an extra thousand just to reach that maximum,
exactly.
right?
Exactly. Yeah, that's exactly right. If that was your goal, or if you have that capacity to do that, you have the cash flow. I know people are also, trying to buy presents and all that stuff too, of course, and you've got to manage those needs. But now's the time really to look at that, because if you wait till January, then it's too late, right? Like, at least for this year, you can't really do anything that would impact 2024, at least from a payroll standpoint. Now, I will say if you're a business owner, you got a small business or something like that, now's a really great time to look at, do you want to open something right for your business? Like a lot of retirement plans, like we'll discuss this sometimes around the tax season, we'll let you fund your IRA or your Roth IRA up until you file your taxes for that year. So you have a little bit more of a window, but with a business owner, if you wanted to establish a retirement program like a 401k, and a lot of people don't realize that you can open your own 401k. Even if it's just you, frankly, like running a business on your own, and you've looked at this year and you're like, gosh, I've had a really good year. Maybe talk to your tax person, like, hey, would it benefit me to open a retirement account where I can maybe defer some of that income from taxes. Some of those plans, even though you may not have to put money into it before the end of the year, may have to be established. Like a 401k is a great example. You need to have your plan established before year end. And then that opens up that window for you to be able to make contributions for this tax year. Does that make sense?
Yeah, so I was going to ask you why this is the right time to do it, and you said it has to be established by year end.
We do. Yeah. I mean, it's not as if you don't have any options. Like I said, you could still at least do an IRA, but now would be a good time to have a conversation, with your tax person, especially if, hopefully people are in a good spot, with their business and so, gosh, really have had a good year this year. What can I do to leverage that for myself? And, I'm a big fan of the retirement plans because a lot of times you can get deductions for that. So it helps with the taxable income that your business is throwing off, and it helps you with your retirement goals. But if you wait till 2025, you may be limited to like a typical IRA, and some of those plan types that a small business could normally open just might not be an option. So be thinking about that now.
At Dewey's, we celebrate every day, but no one celebrates the holidays like we do. Right now, it's the season for sweet treats at any of our 3 Triad area locations. In Winston-Salem at Thruway and Renolda Manor, plus one in Greensboro at Friendly Shopping Center. Easy holiday ordering is also available at local.deweys.com. It's also the season for raising sweet dough for your organization. Contact any Dewey store for information on how you can set up your own holiday fundraiser where 50% of the items sold go immediately back to your organization. Plus, holiday stores will be popping up from mid-November until Christmas Eve. In the Triad and beyond, these special holiday shops will assist in raising money for nonprofits, and the locations can be found by visiting Deweys.com starting in November. So make the holidays special for the ones you love and others with Dewey's Bakery, home of free Cake Square Monday all year round. Dewey's, celebrate every day.
I want to go back to one thing you mentioned on the personal retirement contributions. You said that if you turn 50, you can contribute an additional 7,000 or 7,500 for your yearly maximum. What happens if somebody turns 50, like let's say June of 2025? Can they go ahead and start contributing knowing that they have that 50-year-old maximum ahead of them?
Go ahead and ramp it. Yeah, because you could go ahead and say, okay, I know I'm going to be 50 next year. I'm going to go ahead and increase my contribution. And really because you have all year to do it. Like you don't have to wait till you turn 50, right? So they're not defined by like your birth date. It's that year. So it's really better, frankly, even though we're having this conversation at the end of the year. But if you know, like, hey, I'm going to be 50 next year, or do you just turn 50? Go ahead and set that contribution up higher so you can get those dollars in throughout the year and not a rush at year end. That's a great question.
Yeah. And then maybe going back to the topic from our previous episode, which was about how much people could be letting go if they change jobs because of how retirement contributions and default percentages work with their 401ks. Would this be the right time for somebody to look and say, hey, am I escalating my contribution for next year?
Absolutely. Yeah. I think it's a great time, not just to look at 24, but to be prepared for 25. Right. And that's a great reminder. If people have not listened to that, I would really love for them to go back and listen to it, because I felt like that was really good information for people that are changing jobs, or if you change jobs this year. There's so much going on when you do that, right? Especially if you maybe made a move, of your household as well. And nobody thinks, or rarely do people think about the 401k first. And so you may not have realized it. Maybe they went down on your 401k contribution just by default when you changed. Now you have an opportunity to pick that up a little bit, hopefully for this year, and then set yourself up for next year. And I do like those, just to explain what that escalation is. You can set up in most programs the ability to automatically increase your contribution from year to year. It's a way to sort of like use inertia against you, right? Like, so we've always like recommended that, like, hey, if you get a raise, like increase your contribution to your retirement program by 1% or 2%. In this way, you can say, like, in advance, okay, I would like to raise my contribution by, say, 8% every calendar year. And so now is a really great time to think about that. In some plans now it's automatic, or that's the default for you. But in many plans, you have to choose that as an option. So now would be a great time. And then especially if you're like, gosh, this is great information, but we're already feeling pretty pinched, with just holiday spending. Look at it and say, okay, next year I'm going to make that a priority. We're going to make it automatic. And a lot of times you don't even notice it, frankly, out of your payroll, especially if it's done all year.
Yeah. One thing that also could change for people is, if they've just finished up or in the middle of open enrollment for next year,
Yeah.
their benefits deductions from their gross
Yeah.
pay could change. I mean, look, we all know that health insurance is getting more and more expensive. And so what they paid for their health insurance benefits out of their paycheck last in 2024 could increase in 2025. So I guess maybe they've got to get an idea of how that could affect their monthly budget, right?
People going in credit card debt and stuff like that to be able to contribute to these things, because you'll go backward. So that is right. You want to make sure it's something sustainable and that you have an emergency fund, because you can't, you really can't be using your retirement program as a cash reserve. It just doesn't work well for that. So that's a really good point. And I think maybe a related point to that is, as you've enrolled in benefits, a lot of especially larger employers will offer like a flexible spending account, or other types of health savings accounts that may need to be spent by year end. I know, like, for example, my dentist does a really good job of sending us reminders to say, hey, if you have any benefits like that you haven't used, schedule procedures or whatever things you need done by contacts, whatever that you want to do. Because if you lose those, you certainly don't want to put money in a program and then lose it, because a lot of times you put it in there because you're anticipating a need, and the need is probably there, but there is a timing factor to it. Like, especially if you've got to schedule a dentist appointment or an eye doctor or something like that, now would be a really good time to look at any benefits that might expire and try to get that stuff scheduled if possible, because there are just so few business days before the end of the year.
Yeah. Or if you've already paid your deductible for the year,
Yeah.
go ahead and get
Yeah.
that scheduled before the year ends so you don't have to start fresh with a new deductible payment next
Yeah.
year.
Absolutely. Yeah. A lot of times, maybe you hit that max out of pocket and you want to go ahead and get some stuff done. But you gotta plan ahead on that. You just gotta work out the calendar. But those are good things to be thinking about.
Yeah. Well, mark it on your calendar for next year, because
Yeah.
sometimes it's tough to schedule those things quickly for
Yeah,
major
sure.
procedures. Those things have to get scheduled sometimes weeks or months in advance.
Right. Right. That's right.
Yeah, but something to think about for next year. What else? What else do you typically have to
Yeah.
remind your clients about this time of year?
Yeah, I think it's probably on folks' minds, but charitable contributions, if you're going to make those, you want to make those before year end. I heard something, and I don't know the source of this, and certainly people can double check if this is correct, but I heard a lady share that charitable giving as a whole was down something like 50% for 2024, which seemed really incredible if that's accurate. So it's just something. I'm sure there's a lot of factors for that, but if you are planning to make charitable contributions, now is a really good time. I'll mention too, for folks that are planning to do that, now with tax law changes, it may make sense to do a couple years at once so you can maximize a deduction. So, like, it may be, instead of doing your contributions every December. December is a big month, of course, for charities across the United States. Maybe do this year's and next year's if you're in a position to do that, because you have the ability to take double the amount maybe off your taxes, and then the next year you just do a standard deduction. So a lot of tax advisors will recommend you bunch, or like bundle your charitable contributions into a single tax year, just based on the way the tax codes are written now. That may be getting a little bit complex for folks, but I would just encourage you, to look at what you're giving and how that is benefiting you tax wise, and maybe ask a question or two if you've got a tax advisor. Does that make sense?
Yeah, I think so. That's really interesting. And I think the advice there would be to consult your tax advisor
For
about
sure.
that. That sounds like a pretty
For sure.
significant thing to ask your tax advisor about, and maybe
Yeah.
a good topic for us to do in the new year.
Yeah, we
Um,
may be able to get a tax person to come on here
mhm.
with us too, and weigh in too. That would be a great thing to think about, I think. And I'll give just to elaborate a little bit further. Like after we had major tax reform back, I think it was like 2017, and that changed what standard deductions were. So like for a couple, and this is just an example. Like don't hold me to these exact figures, but like say for my husband and myself. I would get a standard deduction on my taxes, say 24,000, which means if I'm going to what we call itemize, if you're going to take more than that off your taxes, you've got to add up things that you could deduct against that would exceed $24,000. And for most people, there were two primary things, aside from like retirement plan contributions that have already happened, right? Like there are two other big things that people would use would be their mortgage interest and their charitable deductions. A lot of people, though, are not giving more than $24,000 away, to charity, nor do they have that much in mortgage interest, right? So, in a lot of cases, you're not benefiting tax wise from a charitable deduction because you're not exceeding what is the standard deduction. One way to look at that is if, let's say, you're close, you're giving away, you know, 14,000 a year or something like that. What a lot of tax folks are saying is, okay, instead of giving away 14,000 this December and 14,000 next December, give $28,000 in December of 2024, and then you take that all off one tax year. Next year you just use the standard deduction. Does that make sense? Does that help a little bit?
Yeah, I think that explains it a little bit better. This is the opportunity for people to exceed that standard deduction
Yeah.
and be
And I
able to deduct
wondered,
more through their contributions.
right. And I have no source for this. It's just my wonderings, frankly, is if I wonder if people have sort of determined that they're not benefiting tax wise from charitable contributions, and maybe that may be part of the reason it's down. I really don't know. That's just pure speculation. But I guess what I would leave folks with is, if you are someone who's really trying to be charitable, and I think that's wonderful. It might be worth just putting some thought behind that in terms of like tax years and how you're going about it.
There's no place like home for the holidays. A place where memories are made. A place where family and friends come together. But what if this holiday season has you looking for a new home? With everything you pile onto your plate this time of year, let the Ginther Group relieve some of that stress and pressure. First of all, they're experts on the local real estate market, and then they'll add personalized guidance to the experience. Let's face it, the holidays are stressful, and the idea of moving during them can be overwhelming. The Ginther Group is here to make the process smooth and even enjoyable. If you're seeking the perfect home for your holidays, then call the Ginther Group now at 336-283-8689 or go to their website at theginthergroup.com. Even if it's not the right time to buy or sell, that's okay. You can still meet with them about your 2025 real estate goals, so you can work with a team you can trust to have you ready when the time is right. That's 336-283-8689. Call the Ginther Group today. Well, I'd say whatever makes people increase their charitable deductions, I'm for, or donations, I should say, not deductions, but whatever gets
Oh,
people to increase their
yeah.
donations, I'm all for that.
Yeah. Yeah, I know you're really active with Big Brothers, Big Sisters, which I think is really wonderful. Like a lot of people have things they want to support. It's just nice if you can support those, and benefit
Yeah,
tax wise. But it's just part of the rules, and how to best use those for your favor. And that's where I think a good tax advisor really comes in,
yeah.
is to help us think through stuff like that. And I'll mention one other thing, before we move on charitable um, deductions and say contributions, is this would be for our older listener, or maybe our listeners' parents or someone like that. If you've got folks that are over 70 and a half, they can make charitable gifts through their IRA, which is a really nice way to do it. Like, especially like we just discussed, a lot of people, they don't really benefit maybe tax wise from writing a check, to their church or Big Brothers, Big Sisters. That would be a way, like, you can get taxable, because when you take money out of an IRA, that gets reported as taxable income normally. But if that goes straight to that charity, that's one way to avoid that. It also reduces what we call minimum IRA distributions. That age has gone up, but you can still do your charitable deductions at 70 and a half. So I know a lot of our listeners probably aren't 70 and a half, but maybe someone who is, and if they're doing charitable giving, that would be something for them to think about.
Okay. And you'll sound super smart and informed with your 70 and a
Yeah,
half year old relative
yeah,
or family friend, right?
that's right. Yeah, that's exactly right. I think you'll look like a genius,
Yeah,
right?
you'll ask that question and that person will look at you with so much respect. It's
That's
amazing.
right. That's right. Yeah.
All right.
That's right.
Well, Jennifer, did we leave anything out?
I think the only other thing I'll mention is, if you're listening, or if you have someone that that's 73 or older, definitely make sure they have checked their minimum IRA distribution. When you hit that age now, if you have an IRA, you're now required to take a percentage of that out annually. It's a super steep penalty if you don't do it. So if you're not sure, check now. Find out where that account's held, and maybe call, or if you've hopefully got an advisor helping you with it, ask and be sure, because you don't want to miss that. They really frown on that, and you really get like a nasty surprise. So make sure you're checking that. If they don't need the money and they're doing charitable gifts, that's an opportunity too for folks. But that's what I would mostly leave folks with. So it's, I guess, several different things they can do before year end. Maybe all don't apply to everyone, but can at least take some action items from it, I think.
Well, but you've certainly covered all the bases here and all the different age ranges and different points of
Yeah.
life that people can be thinking about here at the end of the year. So, um, if folks want to go over their own situation, make sure that they have checked all these boxes that we've talked about. Maybe people would like to speak to you about it. How can they do so?
Yeah, they can give us a ring here. We're local at 336-701-1600. They can shoot me an email. My email is Jennifer at the number three hyphen or dash magnolias with an s.com. So reach out. Just don't wait too long, right, before we get too close to year end. So we want to have a little time to do something. But if you don't have somebody helping you plan for these kind of things, would love to be that person for folks that are listening.
All right. And if you didn't have an opportunity to write that down while you're listening, maybe you're driving in the car, all you got to do is when you get the opportunity, just go in the show notes. We've got the phone number. You just punch it with your thumb and it'll pop right up there on your phone. Same with the email address. Makes it super easy. Contact Jennifer and her team at Three Magnolias Financial Advisors. Jennifer, an early Merry Christmas and an early Happy New Year to you. Thank you
Yeah,
for sharing
thank
such
you.
great information today.
Same to you. Thanks so much.
Securities offered through Private Client Services, member FINRA SIPC. Investment advisory services offered through Three Magnolias Financial Advisors, located at 110 Oakwood Drive, Suite 480, Winston-Salem, North Carolina, 27103. Three Magnolias Financial Advisors and Private Client Services are not affiliated. Private Client Services is under separate ownership from any other named entity. All information is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy. All economic and performance information is historical and not indicative of future results. The market indices discussed are unmanaged. Additional risks are associated with international investing, such as currency fluctuations, political and economic stability, and differences in accounting standards. The views depicted in this material are for information purposes only, and not necessarily those of Private Client Services. They should not be considered specific advice or recommendations for any individual. Neither Private Client Services nor any of its representatives may give legal or tax advice.
This is the Triad Podcast Network.